When long-time opponents of a stock eventually turn around to support its rise, it's usually a positive indicator. This usually happens after a significant catalyst for this increase was released in August, when Jim Cramer and the Fast Money halftime report panel juxtaposed Tesla against General Motors and Ford. Cramer was unafraid to say that Ford is still one of his favorite equities, but Tesla has managed to emerge as the preferred stock among investors right now. Jim Cramer claims that Tesla has reached its lowest point and that the company's stock price will rise significantly over the coming years. Hi everyone, happy to be back at Tesla tomorrow. American TV broadcaster and investor Jim Cramer is well known for his program Mad Money. Cramer is undoubtedly a Tesla devotee and a huge stock market fan. His recent remarks regarding Tesla have served to further solidify his optimism over the automaker. When asked which carmaker he would prefer to purchase in a recent interview with CNBC, stock investor Cramer unexpectedly selected Tesla. It's crucial to remember that, despite his strong support for Tesla, Cramer was a huge believer in other automakers, such as Ford. How, therefore, did Tesla come to be Cramer's preferred stock? Before we do, please remember to hit the like, subscribe, and switch on notifications if you enjoy this kind of stuff. Let's find out. Bell to stay informed about all developments regarding Tesla. In a previous post, Jim Cramer stated that it's a good thing the Ford CEO decided against spinning off the EV division and added that ICE vehicles is what creates the golden cash. In response, Jim Cramer declared that in 2026 he would prefer Ford CEO Jim Farley to Elon Musk. Cramer continued, stating that the company's goals are impressive and that Ford had ruined Tesla's plan by announcing that it will produce 2 million cars a year. He also revealed plans to raise money to produce an adjusted operating profit margin of 10% by 2026. The host of Mad Money advised Tesla investors to consider selling their shares rather than holding them for a long time, as most investors plan to do, even though Ford only sold about 64,000 of its all-electric Mustang Mach-E crossovers globally in 2021 and posted an adjusted operating profit of 7.3 at the time. However, Jim Cramer has since referred to Tesla as a sleeping giant, pointing out that Ford recently missed Wall Street's expectations for fourth-quarter earnings. This comes after CEO Jim Farley stated that the business should have performed far better the previous year and that, on the other hand, it left around $2 billion in profits on the table that it could have controlled. Elon Musk, the CEO of Tesla, stated that the company's January orders were the best in the company's history and that we nearly doubled the rate of Tesla's global production. Tesla also reported better than expected fourth-quarter profitability. Due to this, Jim Cramer stated that he preferred Tesla to Ford and General Motors, and that the company is doing well since there is no longer any insider selling. Jim Cramer has said that Tesla might be immune to bad coverage at current levels, which is why the company's shares have begun to soar, even though the study had dropped its price target a few times. Isn't limited to Cramer, as several analysts predict significant growth for the company in the foreseeable future. Jim Cramer attributes Tesla's recent surge to a string of robust corporate results. As investors processed the earnings report and fresh statistics on the gross domestic product, which revealed that the U.S. economy expanded by 2.9% in the fourth quarter, the price of Tesla stock has been climbing. Jim Cramer feels that firms and their CEOs, who ought to be astute enough to steer them, are what really count during earnings season. He continued by saying that, in contrast to popular belief, the economic data did not propel the rallies during the trading season. Speaking on the subject, Cramer mentioned that since it's earnings season in the business and many companies have posted strong results, stocks are rising. He claimed that if you simply pay attention to the Federal Reserve and are constantly in the negative, it can be really perplexing. These decisions won't come as a big surprise if you follow the individual companies. Tesla has been lowering prices for some time now, and Cramer claims that the business has the profit margins to continue doing so. It is evident that just a small number of investors would want to do that. Many are even starting to boost their prices. But Jim Cramer declared that he doesn't want to bet against Tesla when the company's stock is down so much. Despite the analysis and negative opinion, focus on the stock. After a relatively dismal year for the business's equity, Tesla's shares have increased several times this year. Despite this, the company and its investors have faced significant challenges. The stock had several drops in the prior year due to a number of incidents. Tesla has revealed its fourth-quarter statistics. While some investors say the results didn't live up to expectations, Tesla's figures were still smashing records, suggesting that the automaker has a decent chance of making huge profits this year. Over the course of a year, Tesla shares saw a decline of more than 60%, but the stock is again beginning to rise, particularly in light of recent price US and Chinese cutbacks. Cramer pointed out that companies leading the digital transition are mostly the high-quality tech brands that took a beating last year as a result of the Fed's relentless rate hikes. The world's journey in several industries depends on them. He claims that the largest and most well-known growth stocks on Wall Street, such as Apple, Amazon, and Microsoft, crashed and burned in 2022, and almost all of these are just different versions of the same tale. He continued by saying that these equities were halved while their companies experienced no such downturns, and that their prices had risen significantly before the Fed withheld the free money. Automakers have undoubtedly suffered from the present recession, with many finding it difficult to maintain sales and production levels. Additionally, Musk issued a warning in March, stating that Tesla is experiencing severe price, logistics, and raw material inflation. China's cutbacks appear to have coincided with Musk's statement that he believes the market is experiencing signs of a recession, though there is no reason to be concerned. In actuality, Tesla saw a sharp increase in demand and sales in the fourth quarter of 2022, and this year has seen even higher and more successful sales. The automaker intends to significantly increase global production of its best-selling Model Y and Model 3 electric cars in the fourth quarter of 2023. This expansion will be built upon as production is ramped up in newer factories in Austin and Berlin. According to Moscow, if Tesla's production projection comes true, the automaker will be on track to exceed Musk's production target for the upcoming quarter and will eventually resemble the German brand BMW size by the end of 2023. Similarly, the carmaker anticipated that one of the major catalysts to look forwards to would be a new vehicles platform. In a news announcement regarding the initiative, Tesla announced that it will shortly be holding its 2023 Investor Day, which will be broadcast live from its Kicker factory in Texas. The automaker claims that investors will be able to view its most cutting-edge production model and talk about long-term growth strategies, platform generation, capital allocation, and other topics. At Investor Day, there may be discussions regarding capital allocation with Tesla's executive team. These discussions may touch on the stock repurchase program that Musk first revealed in October. As with its prior models, Brett Wynn, chief futures analyst at ARK Investment Management, thinks that if Tesla is able to manufacture this affordable EV, it will once again become the industry standard. The Tesla Bull previously shared his thoughts on innovation and how it can give businesses a significant advantage in the face of persistent inflation and rapidly rising interest rates. COVID-19 investors dumped riskier tech companies in favor of safer investments as a result of Russia's invasion of Ukraine and 19 lockdowns in China. Cramer gave his reasoning for selecting stocks in the future. He thinks he's been defeated and that tech stocks would sharply rebound if the Federal Reserve eases its fiscal tightening. Cramer stated that if the Fed gives in, he would much prefer be in the major tech space, examining stocks that may see a huge rebound with all of the leading cloud firms or the better-run chipmakers like AMD and Nvidia. Cramer also pointed out that a lot of pure pandemic stocks might not be able to bounce back from the lows in the prior year. Despite the fact that Cramer supported Tesla in the same way as it did at the end of November, investors are still keeping a careful eye on the stock because selling pressure has increased over the past several months. The downside possibility in Tesla shares is being highlighted by analysis as they prepare for similarly. Despite the fact that the company is trading well below its anticipated valuation, some ardent Tesla bulls are beginning to recognize the value in the decreased price, regardless of what happens in the upcoming year. How do you feel about the performance of Tesla shares this year? Please share your thoughts with us below. And don't forget to let us know how Tesla is rated. To find out more about Tesla's recent activities, click the next video that appears on your screen.